last 9 months, 12 months, something like that. But I just realized that recently, to be honest, that at the end of the day, the value that the network has, it's not just the price that you can see on the chart relative to the dollar. There is much more than that if you think about that, right?
Yeah, I mean, it's interesting, just from an esoteric perspective, to think about the fact that, like the Bitcoin network, the protocol itself, it has no way of knowing what the market price is. Like
Yeah,
the Bitcoin network doesn't know what the market price is, but it always knows what the circulating supply is.
yeah.
Every
I
10
think
every
the
10
network
minutes.
doesn't even
Yeah.
care about the price. They just care about transactions.
Yeah, I'm saying like the computer code, right? The software that's running the Bitcoin code. It has no idea what
Yeah,
the price is. It's just constantly maintaining, checking to make sure that the circulating supply adheres to the
yeah.
code.
It's just an algorithm at the end of the day.
Yeah.
It's not impacted by price because an algorithm cannot feel feelings like greed or fear or whatever. It's just programmed to do whatever it's supposed to do, no matter what price Bitcoin is trading at, right? And that's one of the beauty of it.
Yeah, I don't know. I mean, I think with Bitcoin and as far as like if you think of like the big picture, right? I think if you think about Bitcoin through like a perspective of Moore's law or a parabolic S curve, I think we're at the well, it's hard to describe an S curve without having a visual representation, but it's basically, it essentially goes extremely parabolic initially, and then it has a period that still is described as exponential, but less so than the initial third. And then the final third is a blow off parabola, right? And
Okay, now I'm getting a little bit lost. Are we talking about price, hash rate, adoption? When you say parabolic, what type of measurement you're talking about?
so if you think about Bitcoin's life cycle through like the entire life of it,
Okay,
essentially you have at the very beginning you have a parabolic S curve, right? So you have, as the adoption initially happens, right, in the period from like 2012 to 2017, right, you have what would be described as more exponential gains than, say, the
oh yeah,
period from
okay,
2017 to 2022, right? But
yeah, got it.
it could still be described as exponential, just less so, right? And I'm making the argument that that period from 2012 to 2017 was the initial period of the S curve, and then we're kind of in the what would be the uh,
The
second third of
third,
the second third of the S curve where it
okay,
sort of lessens off, and then the according to Moore's law, the final third of the S curve would be you know as parabolic or even more parabolic than the first. And so that's kind of the way I see Bitcoin in the long term, right? And that's like the final, you know, the final. That's when you have like Bitcoin adoption, right? And that might. I mean, who knows how far away that is? It might be like, you never know. Like you don't know how far that is.
yeah, yeah, I agree, I agree. It could be 5 years, it could be 20 years. Nobody knows. Yeah,
Yeah,
of course.
I'm not going to try to play Nostradamus. I'm just saying that like if Bitcoin is applying to the Moore's law, then that final parabolic leg of the S curve will play out, eventually. And that's probably the scenario where Bitcoin basically, you know, its fiat pairing value doesn't matter anymore, right? So, and who knows
Yeah.
how far away that is, but
Well, I think at the end of the day, one good reason to find out it would be at least being exposed to it. And even if you're one of the people who don't really believe in it, or you don't want to risk your money on it, but again, just let's just think about that. If what you just said it will come to fruition, right? Even having something like $1,000 put in, right? Will it hurt? Even in the short term, no, it wouldn't hurt. But if you think about the asymmetric risk, right? If it really goes parabolic, $1,000, sure, it's not going to change your life, but at least you would have some sort of exposure and you could profit from it.
Yeah, man. I think another important thing about the if you're talking about an S curve, again, we don't have a visual representation, but if when the S curve hits that middle third where it kind of cools off in adoption, the natural thought process of like human emotion is to think that that's going to continue, right? To think that the trend of dampening volatility will continue, and that we can expect that into the future, right? And that the final third of the S curve, again, these people wouldn't be thinking it in terms of an S curve, but if you were, they might project lower volatility out on the final end of the curve, and that's just like human emotion, but it's not it doesn't align with the S curve. And another important distinction of that is that like when you have that final S curve playing out, eventually there's a point where there's limited alpha right after that final parabolic leg. So, and you can see this with like a good example is like the jet engine, right? There was a time where like the combustion engine, right? It was invented, and then it it began its an S curve of adoption within the world, changed the world, but then at a certain point it hit the final third of the S curve and reached maximum adoption, and then it basically hit a period where um, there's really no alpha left in combustion engines, right? I mean,
Yeah,
they're up against the laws of nature, right? Like you can't, you can build a plane that goes the speed of it goes right underneath the speed of sound, but the cost of building a plane that can exceed the speed of sound is so intense that it doesn't merit the cost, and basically there's no alpha there.
yeah. It's like what happened with the Concorde, I guess.
Yeah, yeah. So I mean
All
that'll
blew away.
happen. Yeah, that'll happen with Bitcoin too, right? I mean, like at a certain point, um, once Bitcoin hits adoption, right, then there's really no alpha left. Um, I mean, it'll still be a good store of value, but it won't like increase exponentially.
Yeah, I guess even if you look at the chart the way it is right now, you can see, as you were saying, that it went up and it was really parabolic in the first 3 4 years, and then it cooled off, and then it regained a very steepening curve to the upside, and then it was kind of flat for like 2 years, 2000, 2018, coming in 2020, and then it went parabolic again, and now it's kind of flat. If you look at it on, let's say, on the weekly time frame, right now it looks kind of flat. So I guess over time these kind of surging periods will actually decrease a little bit. Maybe they will be sharper, but shorter in duration. The problem for me is that you never know, even if the time duration of the upside move is shorter, in time, you never know how much it could go up in price. So I don't know yet if people there is a branch of people which are saying, at this point it's not convenient to get in at these prices because the upside potential is really really diminished. Well, I don't know about that. I mean, is it diminished? Even if maybe you're not gonna get like 20x, 30x, but even if you can get 5x, 7x, would you speed on it? Well, I wouldn't personally. It's still a good game, right?
Well, that's what I'm saying is like it it people's expectations are rooted to what's currently happening, right? So they probably don't understand like network effects and things like that. So yeah, naturally you know you look at the chart and you notice like look, Bitcoin has dampened its volatility since 2017 really, and yeah, it's probably going to continue that. And then you think like, well, that's because the market cap's increasing, right?
Oh yeah,
And
that's what people say. Yeah,
yeah, and that's a good example of something that's true, right? I mean, as the market cap of a an asset increases, then the volatility will
yeah,
decrease.
yeah. Because
But
essentially,
it's
you
just
you
one
were wanting
variable.
to move price around. Yeah,
Yeah, but it's just one variable, right? It's a complex system, and there's multiple variables.
yeah. It's a complex equation. Yeah, of course. Because just just to make an assumption, right? Let's say you have some sort of a trust issue with one of the major currencies in the world. It could be the yen, the British pound, or not to mention the dollar, right? Let's say if we have a trust issue with the dollar and nobody on the planet wants dollars anymore, I mean, what could happen if all those money get, transitioned into Bitcoin? You never know, right? But I would assume that it would just go parabolic at that point. Sure, this is just an assumption. It doesn't mean that it's going to happen, or it will happen tomorrow, or in 10 years, in 20 years, whatever. But when you start to try to forecast these kind of dynamics, you need to take into account a lot of different variables. So the market cap alone, it's not enough, I think. Yeah,
Yeah, man. I mean, well, like we were saying before, the fiat system constantly exploits people's trust in it. So that's unsustainable, right? Eventually, it will hit a point where after an exploitation that it just violates the trust so much that people no longer trust it, and then yeah, like you're saying that's when that scenario comes into play.
yeah, that's why I picked specifically the trust concept, because at the end of the day, in every fiat money's currency system, trust it's the base of everything. If you don't trust the system, if you don't trust the government, the currency is fucked, and we've seen it time and time again throughout history. I mean, a lot of fiat currencies has gone to extinction because the trust has been crushed, and nobody wanted that currency anymore. So
Yeah,
we had
yeah. Personally, my opinion is that that my opinion of how that all plays out is that lesser currencies collapse, and then it just goes up until you have a scenario where you basically just have the euro and the dollar left, and then eventually those collapse. But so again, yeah, I mean, who knows how long that takes to play out? I mean, we might be
yeah
dead
we
before that happens. I mean,
yeah,
uh,
absolutely. I mean, the funny thing when I really stop a minute and I step back and I start to think about all the materials I'm consuming on the internet and all the documents I'm reading and all the research how I'm doing, right? And then I stop for a minute and I think, yeah, okay, but the theory could be good. It might play out one day, but how long it's gonna take? I mean, um, am I still be alive for that moment, or maybe I need to find something else to profit of while I'm still alive, because nobody knows, right? It's all fun and good in theory, and it's a really good academic exercise, but you never know the timing of that, the time spent it's gonna take to play out. Yeah, absolutely. It's fun to think about that way.
well, it kind of ties back into the saying that like if you're right early, you're still wrong. You know.
Exactly. Yeah. To add another cliche, right? It's like timing the market. It's not important. Timing the market is important, right? That's one of the reasons why. Although as you know, I basically sold half of my stock of Bitcoin, but I still retain the other half because it's like when you have a trade which is on a free roll. At that point, if you really believe in the trade for the long term, why wouldn't you hold a little bit of it? It's like the asymmetric risk. It's all in your favor. You got nothing to lose at that point if you're already happy with the profits you made. So the you got all the upside potential, and at this point you already have profits in your pocket, so you have no downside potential. It's the best and the sweetest situation to be in, right?
Yeah, man. Yeah, I mean, you're really in a good situation. I mean, uh, yeah, I don't think people don't necessarily need to be 100% exposed to Bitcoin. I mean,
Oh yeah,
if
absolutely, yeah.
I mean, Bitcoin is extremely volatile, and if they're 100% exposed, then that kind of means that they're really not able to buy more or as much as they could have on downside volatility. So
Yeah, I mean, you have heard these kind. I like to call it fairy tale, but I think I'm using the term improperly, but it's just because I don't fully agree with that. But when I say people saying like trash is cash, well, it depends on the circumstances, I guess. It could be trash. Of course, it's trash if you leave it on a banking account being eroded by inflation, of course. But there are a few periods throughout, decade or whatever time span you wanna put on it when you need cash. You don't
well,
need that,
yeah,
because it's yielding you something, but you need that because if you consider the opportunity cost, when opportunity is presented to you, you need cash to take advantage of the opportunity. So you need to be balancing between the assets you're holding and the liquid, the cash that you're holding, because you never know when the next opportunity is going to be presented to you. And if really, if you're really in the market to do business, you need to have a little bit of a stash to take advantage of the opportunities in the future, right?
yeah. I mean, cash has not been trashed the last couple of weeks. That's for sure.
Oh,
Um,
gee, yeah, exactly.
so I
And
mean, yeah,
you're talking with massive dollar bulls have been the dollar bulls for the last year. So yeah, absolutely.
yeah. Well, you're definitely at least right in the current, uh, you know, macro environment. At least,
Yeah,
at
yeah,
least
as
for the
of
last
now,
few
yeah, of
weeks. Yeah.
course.
Um, yeah, but I mean, I think just for me personally, the way I buy Bitcoin is I buy I still work. I have a paycheck. And I just put 20% of my paycheck into Bitcoin every 2 weeks.
Yeah, it's
Um,
like you're trying to build some sort of a pension fund, something like that.
well, yeah, I'm just accumulating Bitcoin at a steady interval. It
And you don't really care about the price, right? You're just doing it every 2 weeks, no matter what the price is. You just buy it.
yeah, and it
Okay.
automatically happens. And people are like, when I tell people that, they're always like, "Well, why don't you DCA?" And I'm like, "Well, you know, I don't. I've never really been a fan of DCAing just because like if you play out the methodology, it doesn't. You end up catching knives, and then you don't buy. And then the other side of it is you don't buy into massive uptrends, right? Because you're waiting for
Yeah.
price to go lower. So and so I mean I'm a trader, so I'm always trading and always uh, timing the market, so to speak. So I don't need that element of my accumulation to be also sort of a trade or a quasi trade. I just buy it and then
Yeah.
trade it on top of it.
I
Yeah,
yeah. I guess. I mean, at the very least, you have a solid strategy. You know what you're doing, and you are pretty adamant about what you're doing. So it's all fair and good as long as you have a plan. You're